Welcome back, guys and gals. Welcome back, welcome back. It's about that time of day again, 7:30 a.m. Eastern Time. Welcome back to our morning prep. We're looking at crude oil futures this morning, and we're going from the screen to the floor, starting here with me in Los Angeles. My name is Joseph. I'm here in my home office in Los Angeles. I'm a technical analyst. I run a live trade room Monday through Friday at 8 a.m. Eastern Time over at School of Trade. Come out and see me sometime. We'll talk about all of the stuff we're talking about here this morning. Again, I'm a technical analyst, so I'm using charts, right? Not using fundamentals, I'm using charts. And of course, today I'd like to provide you with a top-down approach, starting with daily charts, weekly charts, and moving all the way down to analyzing what's happened overnight. And boy, do we have an exciting overnight session to talk about this morning. We know we're going to start with the top-down approach, moving all the way down to a daily chart, right? Telling us exactly where we should be looking for those high percentage trades each morning starting at 8 a.m. Eastern Time. Remember, guys, we use the past to anticipate the future, and I'm going to anticipate the direction at the open based on what I've seen overnight, and of course, we will be looking for those high percentage opportunities starting at 8 o'clock this morning. Now, once I'm done going over my charts with you guys today, I'd like to toss it all the way across the country. We're going to go from Los Angeles all the way to the NYMEX exchange in New York City. I've got my good friend Marty Errico. He's a graduate from School of Trade. He's also a member of the Traders Audio Group, and him and his partner Jeffrey have a wonderful broadcast every morning at Traders Audio. They provide a live broadcast right from the NYMEX exchange, right from the floor of the natural gas and the crude oil pit. So check them out at 8:50 a.m. Eastern Time, Monday through Friday. It's a fantastic broadcast. And Marty this morning is going to be telling us a little bit more about multiple market direction, multi-market divergence, market internals. We'll look at some option prices, and very important, we'll look at those very useful pit session levels. And Marty will be sharing his screen this morning, looking at some charts he's watching this morning as well from the floor. All righty. Enough chit-chat, JJ. Let's jump into the charts and let's take a look at what we're looking at this morning. First things first, what a wacky, wacky Wednesday we got on Wednesday. Now, if you rewind the tape, if you recall, we talked about yesterday morning, Wednesday morning being a four-star day, a four-alarm day, right? A four red flag day. We had inventories on Wednesday, FOMC day. We had contract rollover, and it was wacky Wednesday of quadruple witching. Guys, with all four of those news events coming out yesterday morning, we knew that we had to be careful, and boy, was it a sloppy day. We had some great chances to buy the lows and sell the highs on Wednesday, but boy, we get a chance to get a taste of just how sleepy and sloppy that volume can be. We talk about this all the time. Summertime trading doesn't mean we can't trade. It just means we have to be aware that some days, like yesterday, traders are going to have an excuse to leave their desks, go to the beach. Yesterday, it felt like by 11 in the morning, it felt like everybody had already put the sunblock on and already gone to the beach for the afternoon because everybody was waiting on that FOMC report. And boy, did we get a report. If you dug into the report yesterday, and I put a little bit of this in the blog last night, if you dug into the report yesterday, basically what the report said was that the Federal Reserve was prepared to start withdrawing stimulus if they can get the unemployment rate down and get the jobs coming back. Now, clearly, the market reacted poorly. The market reacted bearishly to that news. And I was just talking to Marty about this morning before we got started, about how it felt like in the pit, everybody just took off, didn't even care about the FOMC report, came back this morning, and now we're seeing what the Asian markets reacted to, what the London markets saw in that news report, and of course now this morning we're going to have those U.S. traders coming in, and I'll tell you, this is a really important day in the next few weeks. Let's take a look at why I think this is one of the most important days we're going to see over the next few weeks. First of all, we can see this daily chart. We start out with daily chart here. We can see this supply zone clearly has held properly. This is a technical indicator that we use with our students. It's called our zones indicator, and basically this marks up supply in red, and of course down bottom it will mark up demand, right, in green. So we know that when we test supply, we're most likely going to see prices collapse, right, and come back down in, unless, of course, there's too much demand in the market, right, and prices will keep rising. We can see on this daily chart, first of all, that we have gone through the top of that wedge into that sell zone, and now we have collapsed. Now, it's always very interesting when we have a technical chart that lines up with a fundamental move. Think about what's happened. We had no idea that by the time we'd be burying into this sell zone, that we'd also have a wacky Wednesday, a Fed day, an inventory day. But it just so happens that this whole symphony orchestra without a conductor, right, which we call the markets, the technical clues that we saw said price should have a hard time to continue to go higher. We saw bullish sentiment going into Wednesday, so clearly this was something that really changed the opinion of value. It's incredible to me as a technical analyst how we get these small clues from the charts, and then the fundamentals will come in and just, boy, put that nail in the coffin for you. So, of course, the price action pushes lower this morning on the daily chart. Now, we do see a clue here in today's daily candle, and this is a very big clue. What do you see in this daily candle? I see a big wick at the bottom. That means the beginning of this morning, i.e. the London traders, i.e. the tail end of the Asian session last night, they pushed this price all the way lower. But now it appears the U.S. traders coming into the market may have a little bit different opinion of that. Remember, guys, news may affect me in Los Angeles a little bit differently than it affects one of my students in Tokyo or one of my good friends in Sydney. Think about that. If you're sitting in London right now, that FOMC report may have had a completely different impact on you personally than somebody who's living in New York City, right? If different people react differently to this, we're going to see a very big volatility spike back up this morning. So we are excited to see what the U.S. session brings for us this morning. We already know what the Asian session, the London session told us. The Asians and the London traders, they saw prices moving lower. They saw value in lower prices. Let's see now what we're looking at here for the U.S. session. Let's move on now to a 4-hour chart. The 4-hour chart is going to give me a lot of clues. And you're going to see this is exactly why I say this could be the most important morning session we get over the next few weeks. We keep hearing this talk about 100. Hey, I heard 100's coming. Heard 100's coming, right? See 100 there? Yeah, I heard we're going to do 100 by Friday. Guys, we don't know when we're going to go to 100, but I'll tell you right now, if this buy zone at 96.74 holds this morning, we know 100 is most likely now in the clouds, in the cards. You'll notice I've marked up an ABCD. So we are looking at symmetry here. I do have symmetry now up at 101. This is very important. Think about what's happened. Asian markets saw value in lower prices. London markets, value in lower prices. Will the U.S. traders, will they come in and will they see value in higher prices? Will the U.S. traders come in, right? Will all of the aircrafts, will all the delivery companies, will all of the hedgers, will all of the demand buyers for crude oil, will they come in right now and say 97? Boy, that sounds appealing. Let's buy 97. Because remember, as the U.S. markets open this morning, new traders enter the marketplace with different opinions. And if the big airlines, right, if FedEx, right, if UPS comes into the pit and says, no, we see value in buying at 97, this price is going to jump right back up. So this morning, we are really kind of waiting here to see what the personality is going to be coming out the open. I personally am going to sit on hands and stay very patient this morning, waiting to see what the market's personality looks like as we go into the 8 o'clock, 8:15, 8:30 time frame, and the U.S. traders get to their desks. Bottom line is, I will expect to see a bounce here. I will expect to see some short-term prices rising here this morning. Big drops often equal to big pops, most likely because traders are taking profit. And remember, we just saw consumer confidence numbers just a week ago that said we had some bullish consumers. So in the United States, I believe personally that the consumers are still going to shrug this off. Now, I'm not obviously who they call to make determine on that, right? They don't call me very often to see if they should buy or sell. So we'll see if my guesstimate is correct and we get this pop up today. But again, I'm going to be looking for this price to collapse. If this thing collapses, we know a break below 96.15, guys, the blood's in the water. If we get below 96.15 this morning, look out below, because you know now the U.S. traders are coming in, and they're seeing the exact same value in lower prices they saw in Asia and they saw in London. Let's keep going. I want to move over now to my faster time frame charts. Specifically, I want to start here now with a 60-minute. Let's start with a 60-minute chart, and now you can see the exact price levels. But I'll tell you, it's amazing. These double top price structures, if you're a member of mine, make sure you log into your course materials and look at that double top lesson, because you can see our double tops continue to be that catch. They continue to show us exactly where to expect those bounces. And you can see here, just a little technical analysis produces fantastic support at 96.21. 96.21, that's my line in the sand here, guys. That is easily our line in the sand. You can see we've already bounced, and we're probably going to continue to rise higher here this morning. My target for the buyers is at 97.63. 97.63, that's my target for the buyers here in the short term this morning. We'll have to see what happens. Again, this is a big variable because we do not know what the market personality is going to be as the traders, just like you and I, get back to their desks, read through the report, because most of them took off early yesterday because it was like watching paint dry in the marketplace. So we have here this morning a buy target above 97.63. We do, as you can see here, have a sell zone at 97.23. So obviously we are going to have potential for this price to collapse. My line in the sand is 96.21. Get me back below that 96.21 and watch out, watch out. So we're waiting for market personality. We can easily see we're looking at short-term buying opportunities. Long-term is still a very big variable as far as I'm concerned right now. If I had to guess right now, I would say two-sided trading, buy lows, sell highs, and wait to see more clues on the tape as the price opens this morning. Very difficult to tell considering the magnitude of the news report that came out yesterday. Bottom line is I've got sell points above me. I've got buy points below me. I'll be looking for market personality to give me a better clue later on. Let's take a look here quickly at the VIP chart. The VIP chart this morning giving me a lot of clues here to stay patient. You'll notice here as we go into 8 o'clock this morning, we are right in the middle of the overnight session. In fact, we're right smack dab at about midnight where we began this day today. You'll notice right in the middle of this range, we have the previous high or the previous low of day from yesterday. So we can see we're right on the lows of yesterday. And since we're on the lows of yesterday, that tells me that price could easily get above those lows from yesterday, right, and just take off and head back higher. I have a funny feeling that we're going to get that bullish sentiment to the market early in the morning this morning. All right. If you ask me, we're going to get those U.S. consumers coming in, and they're going to be blindly bullish, in my humble opinion. I don't think they're going to react the same way as Europe and Asia. But at the same time, I'm obviously not who they call for that opinion. So we'll wait and see what happens. At this time, all I can do is sell that reversal zone, buy that reversal zone. I've got major sell zones above at 98 down to 97.63. Major sell zones above at 98.85, 98.53. These were buy zones yesterday morning, and they worked out wonderfully. You got two great buys off those buy zones yesterday morning, off the levels we gave you. So it's easy to see we got major zones above us. And guys, you might be asking yourself, well, Joe, you just said you don't know which direction price is going to go. You're absolutely right. So what I'm going to do is, like I always do, I'm going to stay patient. When we get into that reversal zone, when we see it collapse and leave that reversal zone, that's when I know I'm looking to get short. I'm not putting a sell order just resting there inside the reversal zone. Too dangerous. I have to wait to take the reaction. Then as we go higher, same thing. If we don't get the reversal out of the reversal zone, don't take the trade short. It's pretty simple. I'll wait till we get into the next reversal zone. Again, another sell zone here. If we happen to tumble off that, again, that's where I'm also looking to get in short as well once we take the drop. I will always be using Fibonacci, so if we go higher, I will be using Fibonacci retracement levels as my targets down here. As we go lower, we saw that happen a few times yesterday morning. Keep that in mind. And I train all of our students on this stuff every day in our live trade room. All righty. Levels above me here. Levels above me. We got quite a few you can see this morning. Again, I've got that reversal zone directly above us this morning. I will look for that to be the first reversal area to sell short. 97.23, 97.55. We've talked about 98 even to 97.63. I've got 98.41, 98.53, and 98.85. Very, Very important price level up top here, guys. The high of day from yesterday was also London's highs. The highest point of the morning yesterday was at the very beginning of the morning. If this thing goes on a tear today, it will try to retest those highs from Wednesday morning. Again, we won't know if this thing's on a tear for a few more moments, right? We're going to have to wait here probably another half an hour, 45 more minutes. Okay, we've also got jobless claims coming out here at 8:30. So we are looking for that market personality. But again, as soon as I see any of these levels overhead, as soon as I see them fail, I will be looking for a short. Now, as we go lower, again, as I mentioned earlier, we are expecting a little bit of a bullish tone to the market this morning. Okay, whether or not those bulls will last very long, that's still to be determined. If we do drop lower, be very careful stepping in front of a freight train on these buy areas. Again, if we see price just almost with that, ignorance is bliss, right? If we see that blissful bullish tone this morning before the big money comes in around 9 o'clock, 9:30 and just smacks this thing back down, guys, if we tumble and if we tumble hard, the biggest clue we're going to get is going to come right in this reversal zone. If we see this first buy fail and then the speed picks up and we're seeing nothing but sellers, guys, I'm only going to try to buy these levels twice. If I see these levels of support fail twice, then I'm going to step on the sidelines. I'm going to wait now to sell retracements, and I'm just getting short like everybody else will be. Okay, so it's going to be really important we keep that in mind. The bulls are going to come in early this morning, almost out of ignorance to what's happened overnight, and then get ready to see what happens at 8:30 for that news report at 8:30. Guys, and I'm telling you, if this thing starts to take a tear to the downside, don't be foolish and try to force these buy zones here. 95.73, I'm going to try to buy it there. I'll try one more time at 95.32, but again, if it's just blowing through these levels, I'm then going to be looking to sell short. Then what I'll do is I'll use these as targets. 94.87, 94.68, the prior week's low, that's an easy target, 94.26, 94.14. You can easily see this 94.40, 94.26, 94-ish area could easily be where we end up later on this morning in the crude oil trading session. Lots of support levels below us, but again, I'm only going to give that so much room. I'm not going to let it take back too much profit we made this week already. I'm not going to try to predict. All right, guys, that's all I got here on my charts. As you can see, slightly bullish right now as we open up the doors on the U.S. session. But at the same time here, I'm excited to see what Marty's got going on his side because something tells me Marty's got a little bit more insight coming from the trading floor. Marty, am I on the right track here? What are you guys seeing on the floor over there this morning? And good morning to you. Happy Thursday.
Hey, happy Thursday to you too. Good morning. So we have actually a bunch of news due out today between 8:30 and 10 o'clock today. So I do want to kind of point on the data points that are going to be coming out today. Now, I'll get to the other stuff in just a minute, right? So we have data. We have jobless claims at 8:30. We have PMI, flash PMI at 9 o'clock. We also have some existing home sales, Philly Fed, and leading indicators at 10. So we do have a lot of variables in this marketplace this morning here. And early morning so far, as we look at some charts and we kind of get an idea of what's happening, yeah, we saw this big downtick, and we have been, and we can continue to be just trading lower here off the opening bell this morning. So let's kind of get down to the nitty-gritty, and let's take a look at what's what. So I'm thinking if we can get above the 97 bucks this morning, we can open up above $97. We have a little hope in this market to go a little bit higher. But I think, as JJ said, once we get below that 95 half, 95 even, I think we're going to be pretty much watching the train go south, basically. The big mover in the market yesterday was the dollar. I don't know if you guys saw, but the dollar really ripped to the upside yesterday. And I mean, that inverted correlation is always the case with the dollar here. Dollar's back in the 82 handles, so you can see dollar moves 2 handles, and crude moves 2 handles in the other direction from 97 to 90. I mean, from 98 to 96. So that's basically what we have to look at as well. That dollar inverted correlation, risk on sentiment. We've been falling now. Dollar's starting to reverse just a bit, and now crude's starting to come off its lows. So that's basically what some traders are looking at. The products as well, they have been getting a little bit beat up here in the overnight session. I'm looking at RBOB and heating oil. Again, we all know crude, RBOB, and heating oil all trade in the same pit, so these markets follow each other. RBOB started to trade a little bit lower down into the 284 handle. Heating oil trades into the 292 handle, 293 handle. So we did see finally a little bit of a reversal, if you will, and we will have to continue to see if we could possibly reverse. Alrighty, guys, let's move over to now our charts here. Our multiple market divergence, as I mentioned, we did see once again lower prices in the crude, Brent, RBOB, heating oil, but we're starting to see a little bit of a reversal. So let's call it lower to sideways type trade, huh? How about that? Brent crude this morning trades right now at 104.41, 104.41, and in the overnight session, we came down from 106 all the way down to 104 and started now to kind of show a little bit of reversal. Again, we're down about $1.50 across the board. So far this morning, the spreads, take a quick look at your supply-demand differential. The spreads, they're all very sideways and they're tough to get a read on. At the moment, though, what I see in the crack values in the supply-demand differential in all of our other spreads, they're all in backwardation quite significantly. Obviously, is that you would see that they are in backwardation, right? I mean, what we've been watching was these spreads start to kind of come in just a bit in the morning, and now they're just totally gone. They're in backwardation big time. Bottom line, they're bearish, but we could obviously see them start to tighten up and soften up just a bit, and then probably bring life back to this market. So it all comes down to the opening bell. If we can open up above 98, 97 even, we could have a little hope to the upside at least. Again, we could have a little bit of a hope. So we're going to be looking for the dollar to be turning around. We're going to be looking to get above that 97 even. 97 even was the 12 a.m. Globex Open. 97.05 was the 12 a.m. Globex Open. So that's what I saw off the JJ's chart, I remember. So I mean, it's going to be a very important level. $97, 97.05. So if we can get above that, we can get a little bit of a buy sentiment into the market. If not, we'll see how many people come into the pit and see how many people come start selling right off the bat. So that's kind of important to see. As we spoke about yesterday, it was kind of dead in the pit. It was very slow. We were waiting for FOMC. We saw them mainly just kind of rolling positions and very dead type sentiment. Again, we were all talking about it. And then finally, when the number came out, the market exploded, and it was just a lot of position balancing, basically, from the large players and also small locals. So it was pretty tough to get a handle on, at least direction for the most part yesterday, but we can still kind of try our best. So, alrighty, guys, let's look at the volatility real quick. This morning, vol is rising. This morning, I got about 22% in the implied volatility. The OVX settles the day at around 20. I have about 2180, but I don't know why OVX says 1999 right now. But the vol index, front vol volatility, they all trade around 22% at the moment this morning. So we're going to have to keep an eye on these volatility readings. Volatility for your RBOB and heating oil have been and continue to be climbing as well, about a full vol. So again, we're higher by about a vol and a half in the fronts and about a quarter of a vol in the backs. All right, so we looked at our, we took a look at what's happening here in our spreads, in our multiple market divergence, in our risk-on, risk-off sentiment, and we know we have a risk-on sentiment. We know our spreads are telling us sideways activity and telling us that, hey, you have to watch that $97 level. If we can pop above 97, this all lines up for us to be able to kind of come in a little bit of a buyer. Alrighty, so we're going to take a quick look now over at levels. Guys, for you, we're going to look at levels, and then I'm going to let you all go because we have to get ready here. Okay, guys, levels from yesterday's pit session. We're really not near any of these major levels. I mean, we do have a few of them down here, 97, 13, 97, 90, 96, 91 that we want to keep an eye on right now that we're kind of breaching off of and reversing around these levels. So that's why I believe that. But they're not hit in the pit session, so they really don't mean much to me if they're not made in the pit session. Alrighty, guys, pit session high for yesterday. In the pit, it was 99 even. 99 evens hit in the pit. On the screen, I think it was like 98. What was it, 98, 98 or something like that on the screen? I'm not sure, but in the pit it was 99 even. Pit low, 98.48. We end up having a daily pivot today at 98.55. Once again, 98.55 daily pivot. We end up closing and selling the day at 98.48. Alrighty, guys, resistance up above, I have 98.92, 99.37, and 119. Support down below, I have 98.10, 97.13, and 96.91. Open interest, ladies and gentlemen, this morning here currently stands at 285,000. 937. Now, I like to put the open interest number from yesterday so you guys can see the difference between. So you can see open interest rises just a bit. That is bearish, by the way. 285,331. Keep in mind today's expiration of July contracts across the board in the pits on the screen. So July will be off the board tonight at 2:30. Well, this afternoon at 2:30. Let's take a look. Okay, volatility, as I mentioned, rises up to 22%. As we've been consistently watching that vol kind of just rise up. We've been watching your OVX also rise up around 2164. I had 2182, and then I also have just about 1898 on the vol too. So I'm not going to pay attention to that number. I'm going to really look at vol in the mid-20 handle right now, rising, which is bearish for crude, of course. So we're going to see what it looks like at the open. If it's still high, then we're going to be looking at a little bit of a different direction because our spreads are telling us that we're having bearish-like sentiment, but we do have a lot of news, so I'm going to let that 8:30 news, that 9 o'clock news, that 10 o'clock news pass by, and then we can kind of see what happens. And I really want to see if this pit fills up today. Alrighty, guys, let's now talk about some options trade. Large trades in the pit yesterday. We saw that still. We saw 98, 100, 102 calls, all trade to the upside. We saw 97, 95, and 90 even puts trade all down to the put side, but actually more than 2,000 times. We saw about 4,000 of them yesterday trade. So that was quite interesting, as we're pretty much neck and neck in terms of just a little bit more activity in calls compared to puts on skew and options. We also saw some artificial synthetic bids come into the market yesterday. They nailed the July and Augie 100 fence. So they do Augie 100 fences, and that means that there's like a synthetic bid, if you will, into the market. So I mean, trying to project other things. That's like putting on your time to sales window, nothing but green buying, hundreds and hundreds of lots. And they're just, oh yeah, we're buying. But it's a synthetic bid. So I would watch. I'm going to see if that order comes to anything today or if it just dies out and fades out like it was nothing. So they do put a synthetic bid in the market quite large as well, over 2,000 times. So in the options pit yesterday. So it's something that we want to keep an eye on. Alrighty, guys, natural gas has been just rising due to some weather. We saw weather reports hit the board yesterday, 6 to 10-day forecast, giving us warmer than expected temperatures across the United States, and that's why we have seen natural gas trading higher. We do have just a lot of resistance up above. Again, I think clearly we can sell off obviously now if we get a bad number. That's if we get the build the natural gas inventories. If we get a draw or we get anything below the 89 BCF, then we can trade higher. Right now, we were speaking about yesterday. We didn't test $4. We were talking about the 390, 395, heavy resistance. We're going to sell off at 395. We got down to 395. We sold off in the overnight, not during the pit session. Yesterday's high was 398.30. Your low was 393.60, and we closed and settled the day at 396.30. Today, your daily pivot is 396.1. Once again, that's 396.10. Resistance up above, 393.30. 391.40, and 384.60. Support down below I have for you guys is 398.60, 4 even, 880, and 405 half. So guys, again on natural gas, we're going to be watching for your implied volatility to still drift below 30% until we get up above $4. We're going to be watching that level and the numbers. Anything, well, I believe we're looking for 89 BCF. Let me just double check that real quick. 89 BCF. If we get above 89 BCF, we'll be selling. And if we get below 89 BCF, we will be buying. It's really simple. It's that simple in this report. And again, that's basically how these guys on the trading floor are going to be favoring this market here today, as they were kind of buying it all yesterday and the last couple of days. We saw a little profit taking come into play in natural gas as well the other day, but it's really nothing too spectacular here. Yes, that's going to be 89 BCF. So 89 billion cubic feet. If we're above it, so we come out 90 BCFs, we're selling it. If it comes out below 88 BCF, we'll be buying it. But we're looking for a little bit more of a dramatic impact on this number because there was a lot of demand due to some warmer than expected temperatures coming into the country and cooling demand. That's what we call it, cooling demand, ladies and gentlemen. So there has been a little bit more cooling demand lately in the natural gas. So we are going to continue to keep an eye on that here. Now as it's 8:05, I'll see you guys in just about 45 minutes. On a Thursday edition, ladies and gentlemen, of the Crude Oil Natural Gas Squawk here down on the trading floor. Again, I'll see you guys all in just a little bit. back over to JJ.
Thank you, Marty. As always, my friend, good to have you here on the call today. Thanks for spending your time with us. And guys, thank you so much. There we go. Sorry about that. And thank you so much for coming out and seeing us here this morning. As always, really appreciate you guys coming out and joining us every morning at 7:30 a.m. Eastern Time on our live broadcast here. Marty's directly from the trading floor on the NYMEX. Don't forget to check out Marty every morning at 8:50 a.m. Eastern Time on his broadcast with Traders Audio. You can reach him at Marty at Traders Audio. I'm JJ at School of Trade. I want to thank you all so much for coming out and joining us here. We got one more day left in this week. We got a finally Friday edition of the Crude Oil Morning Prep. We'll see you guys in 23 hours and 30 minutes. Don't forget, we got news at 8:30 this morning coming out. We got major news at 8:30, major news at 10 o'clock this morning. We are seeing that little bit of bullish sentiment, but at this time right now, we are waiting patiently to see how these U.S. traders are going to react when they come back into the marketplace this morning. Be careful out there, guys. Today is going to be one of those mornings. We got to be patient. We got to wait and see what happens to those buyers or sellers into the market here just after 8 o'clock. Coming from Los Angeles, my name is Joseph James. Thank you so much for listening. We'll catch you guys tomorrow morning. We'll see you Friday morning, 7:30 a.m. Adios, amigos. Bye-bye for now.